Okay, so welcome to my page. This is Mark 8. Okay, this is Mark 8. Yeah, we are continuing from where we ended last time. Anytime you get a question and then you see maybe um balance, how do you spell balance? Okay, balance, debit, maybe 20,000. And then this same balance, credit, maybe 10,000, right? And then maybe they are talking about the receivable or the debtors, right? The receivable or the debtors or any of them. Anytime you see this, it means this very transaction or this account should have two balance. Okay, so you open the transaction like this. So you are doing it for the receivable control account. You have the debit side and then the credit side, right? So anytime you see a transaction, you see it like this. You must record the debit transaction over here at the debit side, 20,000, and then the credit transaction, credit to at the credit side balance brought down 10,000, right? Uh-huh. So let me explain this. This 20,000, the receivable, this one is also known as what? The debtors or yes, the debtors or sales ledger control account. It means we the customers are owing us what? 20,000. And anytime customer is owing you, it becomes an asset to you. So debtors has which balance? Debit balance. Okay. And then if you see a debtors account which has a credit balance, this one is strange, right? But the meaning of this transaction is it means you are owing the customer for a business. You are owing the what? The customer. Instead of the customer to owe you, you are rather what owing what the customer, which means maybe the customer has made an overpayment. He paid what he is supposed to what pay, or he paid his goods in what advance. Okay, so this is the meaning of what the transaction. And then let's do for the creditors to the payable, and then if you see a payable transaction with a debit and then a credit, right? Let's use the same amount. So let's say the payable. The payable too has a credit balance. So balance go down 20,000, and then balance go down 10,000. So always the payable transaction should have what credit balance. Creditors has what credit balance. Okay, the suppliers, you are owing the supplier, so it must have what a credit balance. All liability has what a credit balance. And then if you see a debit balance for maybe a creditor side, it means you paid more than you were supposed to pay, right? You paid as a business, you paid more than or you paid it in advance. Okay, so let's move on to the side. Let's recording. Okay, so let's do for Uh-huh. So the following transactions are not supposed to be shown in the trading accounts. This one are not supposed to be shown. This two, okay. This two. They are not supposed to be shown in the what. So let's say in the example, if you see a transaction like this, provision for bad debts, ignore it. Cash sales and cash purchases, ignore it. Don't record it in the control account. Provision for trade discounts and then this one, okay. This one, cash sales and cash purchases. We are recording the transactions debtors. Only record what the customers that are owing us. So if someone buy goods and then the person pay for it, it means the person is not owing us. So we don't have to record it in what? The debtors account. If we also what buy goods from the suppliers, we must record it in the creditors account, which means we are owing our what suppliers. If we make a payment to it, to that very transactions, it means we don't have to record it in what a creditors account because we paid for it, so we don't have to what, record it in the creditors account. And then provision for what the trade discounts. We are only recording the actual transactions between what the customers and then the business, okay, or the customers or the suppliers and then the business, okay. We are not recording any estimates of future discounts that may be allowed. And then since it is not an actual transaction, it cannot affect individual debtors balance. Therefore, this transaction should be recorded in the what income statement and then the financial position. Okay, yes. So that's the meaning of what this thing. Yes. So for this very transaction, let's identify okay, analyze the following information and use it to prepare both the receivable ledger contract account and payable ledger contract account for this company for the month of June 2025, 2024. Okay. So this is what I was talking about. Let me use red pen. Okay, so this is what I was saying. Balance as of 1st June. Payable ledger. This one is the credit balance, and then they provide what another what a debit balance. Okay. Uh-huh. Receivable ledger. This one and this. So you must record the debit side at the debit, and then the credits to at the what? The credit. This is the credits, and this what the debit. This is the credits, and then this is what the debit. Okay. Record the debit one at the debit. Record the credit one at the what credit. So for this very transactions, let's focus on only the receivable ledger. Okay. Let me explain that one. For this one, cash purchases. I said we are only interested in the what the credit side, the credit items bought on credit. Okay. So this one we paid for the transaction, so we don't have to what record it. Okay. You don't have to record it. You must what ignore it. You must ignore it. Credit sales. Yes. Credit sale. You bought goods or you sold goods on credit. Okay. So it means someone is owing you. So you must record it in what debtors ledger control account or the receivable ledger control account at where the debit side. Okay. Uh, Cash sales, we are not interested in this one. We don't have to what record it. Okay. Credit purchases also record this one. Record this one in okay the payable. We are only interested. Let's focus on the receivable. Allowances from suppliers. You don't have to record it. Check received from credit customer. You see credit. Check received from what? Credit customer. The customer, it means they are talking about what? Receivable ledger control account or the debtors ledger control account. So you must record this one as well. The credit side of the receivable ledger control account. Cash received from cash received from credit what? Customer. Okay. So this one is check and then this one is what? Cash. Also record this one at the credit side of what? The receivable ledger control account. Discount received. Let's ignore this one for now. Check paid to creditors. Okay. Um, check paid to creditors. Okay. Let's ignore this one too now. Receivable ledger debit balance transferred to payable ledger. Hmm? Receivable ledger debit balance. So where do you find debit balance? It will be at the debit side of what? The receivable. And then we are transferring it. The last time I taught you this. When you want to transfer something at the debit side, you must record it at where? The credit side, right? So this is what the setup. Okay. This is setup. This is the setup. So this is the setup. So you must record this one at the credit side of the receivable ledger account. And then when you get to the payable account, also record it where at the credit at the debit side of what the payable ledger account using what the setup. Okay. Let's move on to this allowances to customer. Yeah, this one they give an allowance towards the customer. Anytime the customer receive an allowance, it's going to reduce how much is owing you, right? So you must record it at the credit side of what the receivable. Bill of exchange payable. Okay. Bill of exchange. You must know the definition for bill of exchange. Okay. It's more like a check. Okay. It's more like a check. So you received a bill. You received what's a bill. So this one too. Okay. I said we are interested in what the receiver was. Okay. So you must record this one at the credit side. Okay. Check from customers discerned. Check from customer discerned check to be at the what? The debit side of the receivable. Provision for bad debts. I said we are interested in what? The actual transactions. Okay. So this one you don't have to what record it. Okay. Uh, Bad debt written off. So a customer is owing you and then the person has made up his mind not to pay. So you must what? Write this one off. So it will be at the credit side of what? The receivable ledger control account. Okay. Because this one is going to reduce how much your customers are owing you. Okay. Discounts allowed. Okay, you have allowed or you have given a discount to your customers. Okay, so to reduce how much they are owing you to be at the debit side. All the items at the debit side will increase how much the customer is owing you, and then all the items at the credit side will also reduce how much the customers are owing you. Refund to customer for overpayment. So this customer, he made payment to his transaction, okay, and then he paid more than he's supposed to pay. Anytime you receive a cash or a check from the customer, where do you record it? This one, he recorded it as where you must record it at the credit side, right? And then now the customer has made an overpayment, has overpaid it, okay. So what do you have to do? You must record it at the debit side of the receivable ledger, receivable control account. Interest charge on debtors overdue. Okay, this customer has is owing you. You told me to pay this how much is owing you at the beginning of the month, or you gave me what a 1 month period. Okay, he hasn't made the payment. You told me that if you fail to pay on this very date, you are going to pay what an interest on how much you are paying. So the interest will do what will increase how much the customer is owing you. So you must do what debit it. Receivable returns. Okay, this one is return what? What? Okay. Okay, so what do you have to do? You must credit it. Customer bought an item and then he has what? Returned the item. So it's going to reduce how much the person is owing. This one is return out what? After that, you record this one. Receivable ledger at where? At the credit side. Okay, they said credits. And then when you are done, you do what? You 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 do what? You credit it. Okay, you credit the accounts. So you do it balance, carry down. Okay, 10,000 at where? At the credit side. Then when you are done with everything, you do what? You balance all the accounts. You must do what? Balance the accounts. Okay. Yeah. So let's see if we'll be able to. Um, okay. So we are going to do the. Okay. So we are going to do the receivable control account. Okay. Control account. So this is our credit side, and then this is our debit side. I hope you can see my board. So we start with the date, the details, the amount. You don't have to forget this when you are anytime you do you open an account, okay, for every accounting question, maybe if they tell you to open an account, you don't have to forget about this thing, okay. So for this very one, I've solved this already, so let me do the solution again so that it will be fast. So you have the dates already in the question. So they give us balance, they give us this one, a balance. Okay, so record it at the debit side. If they tell you the balance is at the debit side, record it at the debit side, and then if they tell you the balance is at the credit side, also record it at where? The credit side. And then use the name balance BD. Okay. So the next on the list is what? Credit sales. This one is receivable ledger, receivable control account, or the debtors control account. Okay. So we are interested in only the only the items bought on credit or sold on credit. Okay. Uh-huh. And then also you received a check. Okay. So check received. Check received. How much? 1,000. 3 million. Check received is 3 million. Check received is 3 million. Check the Senate. Check the Senate. Let me short it. Okay. 90,000. And then we have the cash refund. Cash refund. I have explained this already. Okay. Cash refund. And then also we have cash refund interest charge. Charge. Interest charge. 10,000. We have cash received. You receive the cash from the customer. 400,000. 400,000. Okay. Okay. 400,000. And then there's the setup. Okay. I said it to be at the debit side of what? This account. Okay. So 75,000. Allowances. Allowance is given to the creditors. The debtors, right? 150,000. Bill of exchange. Bill of exchange. Okay. This is a note given to what? Uh, Bill of exchange. Bad debt. Bad debt. Discounts allowed. Discounts allowed. Discounts allowed 50,000. Return inward. Return inward 50,000. So when you're done with this one, I don't have much time. So when you're done with this one, then they said balance on the receivable supposed to be 1,000 at where the credit side of the receivable account. Okay. So when you are done with this one, then you do what? You balance it. Okay. So we check this side. The total for this side is the total for the credit side is 3,867,200. Okay. And then the total for the debit side is 4,670,000. Okay. 670,000. So this side definitely the debit side is what bigger than what this side. Okay. Uh-huh. So uh, okay. So how much are we getting? How much are we getting? Let me do the calculation then. Okay, so now we have okay, so if you do the calculation, you are getting wait, I'm coming. Blah, blah, blah. Come inside. Blah, blah. If you do the calculation, you are getting 803,800. So 4,670 as the total, and then 4,672 as the total, and then the balance for that would be 803,800. Okay. So this one is for the receivable ledger control account. Okay, so try your hands on the payable ledger control account. Okay. See you next time. Bye bye. Okay, one thing, try and then subscribe to my page whenever you are done with the video. Try and then you subscribe to my page and then you like the video as well.